Okay, and good afternoon, guys. Welcome all. Another live trading session. I was trading this morning too, but didn't got any positions. Although I called this low, could have taken 30 pips here, and I also called this low here. Didn't take it. Wanted to put a limit there, but it's not really my thing, so I didn't take it. It was a 50 pip move. So yeah, there's many moves to be taken, and if we have to take all positions that don't give us enough confluences, then it is gambling instead of trading, and that's the whole point. Should be calculated instead of wishful thinking only. Like if your position is based on hope that it's gonna go good, then you better stay out of the market. It's my personal opinion, of course. Everybody does what they want. You know, this is never financial advice. It's just my views, my own trading, and I like to go live because afterwards I can check my own videos and see what I'm doing, and yeah, it's just proof for myself that I know what I'm doing. So now what am I looking at? Well, there is a possible scalp, I think, here, because we have a fair value gap with an order block, so the stop would go below the order block, and we are waiting until this fair value gap gets tapped. Why? Because it's in the 61 zone, the golden box, although it's reversed here, but you can see it's the same zone as this one. So the color doesn't really matter, it's the percentage that we're looking for. Below the 50% FIB here. Look, let's put the 50% FIB on the chart. And you know we do that in green. So this would be a buying position in discount. And for some people it could also be a little bit like, if you see how price moved up here, you see this could be seen as a bit of demand zone, although I'm not completely agreeing there, but we have to consider a lot of options if we want to go into a scalp or take a position. But the thing is, we are especially now waiting here on time for 4 p.m. here in South Spain. That would be, let's go to New York. You can all see it's 10 a.m. in New York, so these guys are starting to really do business now. The coming hour will be exciting. So there's no news events today, so the market isn't that real volatile. That's why we have to be very careful and know what you do. And yeah, I'm looking to other screens too. I got the 15 minutes open here, and let me quickly move this here that I can take my trades on the other screen. So that's a little bit better for me. Let me change this one too. Now you see quickly, you can see my desktop, and now we're at the charts again. So you know, I spoke about this already. This is my blue box theory. I believe that if price is gonna go up to retrace, we have to watch this line here. Why? Because price tends to go back here, if you calculate on the latest swing point, and the latest swing point that has been played out is between this high here and between this wick low. So you can see the swing point high would be here on the blue line, and believe it or not, it has confluences with this fair value gap. And for the rest, most liquidity here is gone, but you see how many confluences we have? We have an old high that has to be taken to drop deeper to a lower level. And on the higher time frames, if we go check the 4 hours, we can clearly see that the line that we drew last week is still made to go to the smart money range down here. The blue line here is the smart money range that I speak over. You can see that a bit as a support where it should bounce off. Is it gonna hit that today? We don't know, but it's just an extra confluence that we're looking at. So let me go to the daily chart and make that a little bigger. We can clearly see the opening price here of the candle. If we would check this as an extra confluence later, when we go in our top-down analysis, then you also see that that's close to the blue line. And let's dive into this. Look, this is the blue line here, and you know we are not looking to capitalize on the complete move. We are only looking to get our pips out of the market, and that's it. And you can see this dotted blue line here. This is the last week. This is the last week low, Friday low. So this is the lowest point where we traded at last week. This is the previous day high, and there's a lot of liquidity in here. But what is the draw on liquidity? What is attracting the market right now? That is the $1 million question, of course. That's always what we're looking for. So why am I looking at this point here? Because we have a fair value gap here on the hourly time frame that hasn't been tapped. Yeah, it has slightly had a tap, but the fair value gap inside here, the lower time frame fair value gap, hasn't been touched. And if we would use that as a short position, let me make this a different color yellow that we can separate the lines later, or the levels later. So what am I thinking here? It would be beautiful to have a retrace under here, and that we see the formation of what? Of an A, B, C to the high. If we only can capture a part of this move, that's more than enough pips to call it a day. Look, that would be 50 plus pips. That's all we need. What also is a big possibility that we are looking for, that is that price doesn't come back down first, and that we have the draw on liquidity for the session here in these fair value gaps. And nobody is saying price should go down, it's just a possibility that I'm investigating. And look what I said, the candle day open high here has a lower time frame fair value gap. So this is a lot of liquidity where we are close at. We have equal lows also below here to push price further down. Oops, sorry. To push the price further down would be, yeah, there's a lot of stops now below here to push to the blue box. So just keeping that in mind. If we then check the 15 minutes, you see the fair value gap. Just we moved it a bit by accident. Let me get that straight first, because there's a lot depending on being precise in trading. Why would I buy here? Because with this fair value gap and this low here, for me it's a protected low. It's a point that if price drops deeper, I want to be out. And if I want to buy here, I'm not just gonna buy at this level. I'm gonna wait until this level is taken around 133 and see how it goes up. If I'm wrong here and we're going up first, like price seems to want to do, then I'm okay with not taking this trade. Let me take this away for a second. I got the numbers anyway on my chart, on my other chart, so let me check quickly what stop loss price did I put there. 121.082. Let me put that there. So what do I mean? Now let's go to the 5 minutes. This would be a great entry because we're not taking a lot of risk. If we're buying below this fair value gap, then we're buying at a real discount where a lot of reactions already took place. You see, now we are creating here equal highs. Let me take those fair value, those Fibonacci's away to clear the chart a bit. I'm gonna leave this for myself. So you see, we would be below the 50% in a golden box, and if we can buy below the fair value gap when we wick down, like we see a quick move down, a retrace like this happening, that would be the ideal scenario. Not saying it's gonna play out like that, it's just playing with possibilities, and that's what's trading about for me. The other possibility would be that we sell above the candle high, but if we see the candle high, the candle open is in an old fair value gap, and there is a lot of liquidity to react from here. So that's why I think the draw on liquidity is bullish for the moment. And if price would come here at the level of the blue box, I would definitely try to sell or just sell and see what happens, and aim for the 50% or this fair value gap. Would I take the entire risk of, let me give this another color here because we don't see clearly. Okay, now it's more clear. You see, if price would give us a tap in into this fair value gap, that's a fair value gap inside a fair value gap and our stop. If we're gonna see what would our stop loss be, it would be 20 pips about. So that's reasonable, especially if you know that we have a lot of possibilities. You know, like if price steps in here, probably see a first reaction. Let me put some lipstick on the charts and draw some things. You see, you have this move, we have the W with the double bottom. We see price wants to move up here. You see, we're getting the reaction that I spoke about, and it's again time 4:15 almost. So, but this would be definitely a possibility that if price steps in here, that we see a reaction, a higher reaction, and then we have a few higher highs. Price has to come down and go after these lows before we would see a whole move up, because they never will let these two lows, these positions, the market can just leave this liquidity in. If we are going in intraday trading, there would be too many people making money already. These two lows have to be taken out. And I'm not saying today, but it can be tomorrow, whatever. You know, like, don't use your crystal globe. Act and react on what is shown, when it is shown. And so that's what I'm waiting for the moment. We have time. I gotta go in about an hour, but yeah, let's see till around 5 what the market does. If we can take a position, then I think the position should be given pretty soon, because it's a Monday. Maybe if the liquidity stays out, you see this is another accumulation zone, and you see these equal highs. There's people going short here, there's people with stop losses above here, so price could push higher, and there is liquidity in these two candles here. So that's why I'm saying in the best position is where we can take the risk of getting into a trade. Let me make this blue. This would be a good position to get in a trade, because at 250, let me change this line here to 250 on my other screen, that we follow closely what's happening. Let me put that on the 3 minutes. Yeah, that would be indeed, like I said, the threshold stop loss, the manual stop loss would be at 121,145. 21,145 would be our stop. If price drops below here, then for me the trade becomes completely invalid. We have the stop. Of course, our stop is a little lower because we don't want to take any risks. Let me put this position in quickly. I'm gonna put this stop is on, I put it on the lows. The exit, we do that manually like always. 148. And we got the stop here at 21,000. That's a risky price because it's an emotional point for many institutions. They're gonna wanna push the price. If they wanna push the price below here, then we definitely gonna see more downside. What also is, the higher time frame bias is bearish. We are trading downwards. You can see that clearly when I zoom out. You see lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower highs. So even if we get a market structure shift here or change of character like some people like to call it, I still believe the market is very bearish in with this with GBPUSD. So just let's be patient, let's practice patience, and let's see if we can get a good trade. You know, I don't use bias too much for my positions because I'm a scalper and my setup doesn't really depend on the higher time frames. So it's really in and out 10, 15, 20 pips if we're lucky, and that's what we do. Okay, I have to respond on this. Okay, done. Oh. So yeah, let's take this arrow and let's see if we could get an entry here. If we could get in this fair value gap and go there, that would be a 45 move, a 40 pip move quickly till the blue box is even a 50 pip move. Those are beautiful numbers, especially if we get the volume and velocity that we pick up price. Look, this is what I'm see. We get this one here, then we get this drop and a quick incline in price. So because I think because we had a drop in Asia, so it's not a real accumulation. We had, look, let's just quickly count the pips here. Look, we had a 80 pip drop in Asia. So London Open should be the manipulation then. And you see, this is the manipulation that we had. Distribution, AMD, for the people that know that, should be from here. Oh, okay, let me take this away because removed another tool to show this. This have been the manipulation zone for London. Look, let me put this here. You can see this was the manipulation. Then technically, and I'm not saying it's always 100% correct. Where is the tool? Because sometimes you know how it goes. You click something and they don't give it to you. This should be the distribution. That's why I have confidence in the idea of going long and taking this scalp. It's typical ICT, but yeah, it's like I always say, we have to wait and don't make too much conclusions based on things that happened before. They can always happen again. That's how we build our setup. But it is watching, for me it is deciding in the moment that I take the trade or not, because I'm really also reading my psychology when I decide to take the trade, and I'm also reading the candles, what the candles are gonna do. You understand? If the candles move in a certain way, and I, I don't know if I can explain this. I know it's based on intuition too, but for me it worked always to work with intuition. I'm okay with the idea that I take my decision based on how I see that price takes a gap, the reaction, the creation of other fair value gaps from how liquidity is created in the fractals. Do we see when price goes up, do we see a higher high, a higher high, a higher low, a higher high, a higher low, then a higher high, a lower low, a lower high, lower. You see how the market generates liquidity, and you start to know which levels of liquidity the market is wanting to go after again. You see how the market keeps manipulating the price, or it's not manipulating, it's just price delivery, price action. But you can, it's like experience gave me the insight there of knowing, like, okay, this is my setup, I know what I'm looking for, this and this, and now price comes into my range. Am I taking the position, or do we stay out of the market? And like I say, I got a 15-minute open here. Look, if we're gonna check this now, because I'm seeing this on other screens too, you see price keeps reacting inside this fair value gap too. And it's beautiful to see how price is respecting this gap. So honestly, and I still probably take the trade and the risk, because look, lower low, lower high, lower low, and we have a higher high here with the market structure shift on the 15 minutes breaking here. The liquidity that we want to trade on is in an order block with a lower time frame, lower time frame fair value gap inside. But look how this candle here is reacting. That for me would also be an opportunity to say, like, fuck it all, I'm just going short. I'm just selling this point with the idea of taking the short from here just to here on this fair value gap. And if we calculate now the pips, look, that will be 20 pips, 27 pips that we can scalp out of the market. But we are looking for another setup, so let's wait and see what happens. Look, yeah, for me that would be definitely a position to sell. We still can get in there, so let me see on the lower time frames. Look, but this isn't the position where I want to really take the risk. Nope. Why not? Yeah, the fair value gap has been taken, all the equal highs have been taken, but it's also been such a boring accumulation zone, and there is no decisiveness here. There is no real volume in the market. So yeah, is this a dangerous position to take the long? Yeah, definitely. Is it worth its while? I don't know yet. Let's see how this here paints. Let me put this and we'll put it in another color. If we would see this, then it's definitely worth the position. Let me change that into yellow or white. Why? Because these highs would generate a lot of stops above to push price higher. But like I say, it's For now, there is no clarity in what the market wants to do. And in an accumulation zone like that, I rather stay out. Although the 5 minute says we should sell, we have a beautiful scalp on H1 saying, yep, we went high enough. But that candle, the H1 candle, can quickly change. We're almost only halfway the hour. Well, let's just wait and see what happens. Five minutes here. Look, the market structure shift. You have the change of character here. But look, we had a change of character here, a bullish chart. Let me put a line there so you guys see what I mean. Let's go to templates. We have the market structure shift here. You see price closes above this high, so it makes a new higher high, makes a new higher low, pushes up again, and just drops down. So is a market structure shift always to be trusted? No. And you see, we even had an internal lower time frame market structure shift here. Then we had one here. Look, we had this point low, and here we had the confirmation. Look, breaks above, goes up and drops even deeper. So we can conclude by that the market is still bearish, because you see we have also a break of structure to the downside here. We have a break of structure to the downside here. Let me take this away because we know the levels that we are looking for. And now we have a market structure shift here, but not here yet. So are we bullish? Are we bearish? Just asking for a friend, you know. It's a ridiculous zone to just click the button and expect everything to go right. So let's wait. Let's see what happens. It's Monday. We don't really have to trade. We're still up for the month. So for the month, I'm up what? 2.5%. This week is gonna be a good week. We're gonna separate ourselves direction to 4-5%. Then next week we go to 7-8% and we call it a month. Look how beautiful price is reacting now. Now we start to see, you see we have the candle break below here, but we still have the higher high, higher low, higher high. You see there's so much information in the market, so little clarity on what price wants to do. So instead of doing stupid things, sometimes it's better to do nothing. Let me take a break. The chart will still be open. Let's wait. We still have to wait anyway to see what happens. I'm gonna make some coffee and I'll be back in a few minutes. stopping. The 5-minute fair value gap has been taken immediately, so it can be a unicorn setup, and we might be even too late for the afternoon setup. Let's see how it plays out. So we're back. Okay, look what a reaction. Like I said, if price action isn't very clear, if price action doesn't want to be clear, then sometimes it's better to sit on your hands and don't click the buy sell button, because you might repent later. For you see what I'm saying, we are trading too much inside of an accumulation zone. Look, price keeps trading between 21,580 and 21,300, and now yeah, we're seeing a slight move down. Also means that we are building liquidity here to go after stops. Yeah, let's see what happens. Didn't make coffee, made a quick Royco minute chicken soup. Also tasty on a cold day like today. It's a 1-minute soup and you took 2 minutes. No, I'm sorry. No, I'm not. But let me switch our diary. And we take note 1630 being ranging sideways since 14 p.m. So for the moment, like I said, how big is the risk here? How many longs have been accumulating? And you see price takes the highest point of this fair value gap, respects it, trades back below, creates more fair value gaps here, bearish fair value gaps with a bearish market structure shift again here, a break of structure, but it's so minuscule in price difference that really there is no clear conclusion to be made. Look, you have here on for the scalpers on the 1 minute that really base their positions completely on market structure shift. On ICT alone, look, you have the market structure shift here. Price gives a lower low, a higher high to a lower low. This is a market structure shift. You have a lower high, a lower low, and what now? We're gonna go after this liquidity in this fair value gap, a unicorn setup. And what are we gonna get out of the market? This? Beautiful, no? Risk 17 pips for risk 30-40 pips for a quick move of 17. That ain't worth my time or my risk reward. Wanna quickly, no, we don't want indicators. And that's something weird, because when I put my chart here, okay, I'm gonna take this back here now. Auto. This is a lower high, so price could drop down to, you know, like, I'm showing you this is tape reading. It's not necessary to always take trades. Like, I got one prepared, but how it looks now, I don't know if I want to take the trade. I'm in this business to make profit, not to play 50-50. It's always 50-50 bet. An educated decision is always better, so let me take this away, because it doesn't serve the greater good anymore. Let me put this on auto again, and let's check on higher time frames. You see, let's see what happens. I probably should go in 15 minutes, but I'll make a picture here like this. And let's see. Because I'm looking for another house that I can rent completely with my company. You can see my company name here, Golden Morning Star. Got it on most of my charts, and would be awesome to rent a complete house on company name as a company investment, as a cost, so I pay less taxes, because the calculation of last year, I didn't do bad in spending money to pay less tax, but I could have done a better job. So rent something bigger, something nice, where I can make a bigger office, put some sofas, some more screens, because I would love to have in total like 5, 6 screens instead of three, four, because the other one is a small one, but like 3 big screens, the screen of my laptop, and a tablet to play around with. That's always fun. I'm watching pictures here. It's actually not so bad. Nah, not really what I'm looking for. You can either be negatively polarized and see hate, despair, and all the bad coming towards you, or you can change your mind and start seeing the good in everything. Be mindful. You can either be negatively polarized and see hate, despair, and all the bad coming towards you, or you can change your mind and start seeing the good in everything. Be mindful. You can either be negatively polarized and see hate, despair, and all the bad coming towards you, or you can change your mind and start seeing the good in everything. Be mindful. You can either be negatively polarized and see hate, despair, and all the bad coming towards you, or you can change your mind and start seeing the good in everything. Be mindful. You can either be negatively polarized and see hate, despair, and all the bad coming towards you, or you can change your mind and start seeing the good in everything. Be mindful. You can either be negatively.
You have an offer coming in.
You can either be nice. My last TikTok videos got good likes. So mi trabajo. Okay. I'm gonna go see if I can buy another screen. So in about 10-15 minutes we will have to go. And as you can see, price action isn't really what we are looking for. But follow me on this one, because I really want to explain you guys something. You see this fair value gap, it gave us the first reaction here. Look, we had a 20 pip move, the same fair value gap. If we would have sold exactly at the top, we would have been what? We would have supported a 3.7 pip drawdown and a reaction of 15 pips where we choose how we trail our stop on the lower time frame. Let's quickly look into this. You see, so we would be trailing our stop here, sell here, trail our stop on this lowest point. So where did we get out with 11 pips? You know, 11. I always preach, if you can take 10 pips a day out of the market, that's 50 pips a week. Let's say we lose 2 days, we win 3 days. That's a 10 pip profit a week with a win rate of 66%. And that would mean 10 pips profit every week. Now, instead of counting like, oh, but 10 pips a week is very little, it's 1%. It's 1%. And instead of thinking on, oh, I need to catch more pips, I need to capture larger moves, start thinking in using more capital. Keep the strategy simple, keep the movements simple. And if you can get, look, if you can get here an 18 pip move and you can close that with a 100k account, that's 1800 with 10 lots. And the rest of the week would cipher itself out. You know, 2 losing and 2 other winning days that are 50-50. So we would have, what, 15, 16 pips profit? That's 1600 on a 100k account per week. We do that 4 weeks. That is $6,400, guys, that you are making on 100k account, on 100k funded account a month. And now you're saying like, yeah, 6,400. Most people don't even make in Europe 6,400. Really, with my sales business, I make monthly around 5, 4, 5, and then I have to be pushing myself in really selling instead of having fun. And yeah, I'm still working out of my sofa, drinking tea, coffee and soup, smoking and talking with people. But there is no ceiling in trading, because we're now talking on 1.5% in a week, well, 6% a month on a 100k account, $6,000 in a month. Well, then push your capital up. Go to 1 million in capital instead of 100k funded. Go to 1 million. And now the 6%, how much is that? With 10 pip scalps. Really, just then suddenly the same strategy where you only take 10 pips out of the market consistently, a win rate of 3 in 5. That's really just pip pip. You have your 10 pips out. You have your 10 pips out, and I can assure you, I can show you way more 10 pip scalps than you can ever imagine. I can take 2, 3, 4 times 10 pips a day if I would be eagerly pushing the button, not following my A+ setup. 10 pips is nothing. So follow me. That's 6% on 1 million is 60k a month. Who is making 60k a month? 60k a month, 10 months a year, because July, August, less volume. You can still trade and take 10 pips out of the market. But let's just count, we take 2 complete months off. So 10 months you're making more than $500,000 a year. And I say skull to that with 10 pips a day. But most people are dreaming of taking these big swings intraday, getting 120 pips on their Twitter or Facebook or Insta or TikTok account. Look, I took a 100 pip swing. Yeah, on hindsight I can put the same there. How much how strong did you enter that position? How strong is your belief and confidence in yourself? 100 pips with a stop of what, 30 pips? So with a 100k account, if they enter with 10 lots, they would blow up the entire account. So they can enter what, on a 100k account with one lot? So on the 100 pips that they are watching all day, they take the same amount of dollars of percentage out of the market. It's just ridiculous. 10 pips, call it a day and have a soup, relax, start a YouTube channel like me, bullshit a little bit with the people and have fun while you wait on a perfect setup. Look, I'm not even gonna trade now. I'd rather take 3-4 good trades in a week, get those 10-15 pips out like this, and get better and better in spotting those 10 pip moves. And when I'm in a trade, you see me trade Friday, I work with a trailing stop, and Friday we only took 0.5 because price didn't give us really more. It went to 10, 12 to 12 pips, and then we had the heavy retrace, so we were thrown out of the trade at 0.5% profit. Now imagine that price moves a little different and we can trail our stop to 10 pips in profit and we can let it run then. And you go to the toilet, you go have a coffee, smoke a cigarette outside, call your mom, play with your dog in the garden, and 30-40 minutes later you come back, watch the chart. I wouldn't do that. I would stick on the chart, but you know the idea. You see 15-20 minutes later that you're at 30 pips. Click the button, get out of the trade, and you have a perfect week and even month. If you then don't overtrade, don't take stupid decisions, don't click that button just to get the instant gratification